what's going on? Hope everybody's having a great evening. Happy Monday. Got a lot of stuff going on in the markets again today. I want to talk to you guys about, I think, what's a good lesson today, because my trading was like really ice cold in the morning. And one of the things I always tell my students is like, it's okay to kind of take some pity patter losses to kind of hunt around for the big trades. In general, it's going to be like having that one hot trade is going to cover up what otherwise would be a choppy day. So what I mean by choppy days, you can see like the Dow Jones today was down 181 points. The NASDAQ was up, the SPY was down, the Russell was down, oil was up, right? It was kind of a little bit across the board. And, frankly, we were having a little bit of trouble trading in the morning. Like I came off right hot out of the gate in TLRY, getting 800 bucks or so. And, the day was going good, but then I just couldn't get anything going. I took some losses in TVIX and Exxon and IQ. And one of the things that I do that I think is important is to kind of manage around like a daily max loss, like mentally, like kind of what you're willing to risk on the day. And when things are choppy, what you want to do is always save yourself ammo in case a hot trade does come up. What a new trader will often do, just talking with so many of my students and stuff is, they come blazing out of the gates, and we do like to do that. That's where we make most of our money. But what happens oftentimes if the market is choppy at the open and we come blazing out of the gates, we don't want to hit our max loss or our daily max pain right out of the gates if the market kind of does a double Lutsy like it did today. And like today we started off a little bit cold, but I have like a mental max loss of what I'm willing to take. And so I'm really kind of managing around that to make sure I don't cross the line over to that, because then I'm just out for the day. And then what happens? All the stuff that you're waiting for ends up going, right? And that becomes huge. It's like so many times when we're new, we want to just, hit some trades. And then what happens is we get frustrated because we've taken some losses and it's gone past our limit of psychological capital along with our financial capital, and then we're out of the game, and right 15 minutes later, like the stocks that you were watching just explode. And so like that's a dance that I'm playing every day to make sure that I'm not approaching those levels, and if I am, then I start laying off my size a little bit so that I can still keep hunting around for the good trade. And that's kind of what happened today. You can see like I never trade this many tickers. Most of my good days, it's like 2 tickers, 3 tickers. I just couldn't get anything going. Number one, I couldn't get anything going because I read the market wrong at the open. You can see kind of at the open. Let's see if we can, take a look at the markets. At the open, the market opened down. The market opened down weak, and so I was thinking maybe we're going to get a little bit of a short in this bad boy. And so I came off the bat and I shorted IQ. I took a loss. Like I was taking this thing for an ORB. I fucking took a loss on it because this thing just spiked up. And then I had this NTNX. This thing gapped down too. And, I hit this thing as it was breaking under the VWAP. And this thing kind of shot back up. And, I played it wrong too because I didn't even have a good ORB setup on this thing. I kind of hit this pop as it rolled over. I was coming back when I should have waited for that test of the 9 EMA. And so I just read the market wrong and things started to squeeze off at the open. And so one of the things to do is to make sure like you're not aggressively taking too big of losses at the open if you read it wrong, so that you can get yourself in the hot trade. And then, later on, I ended up starting to get some traction. We hit this SAEX, which ended up being a good trade. And, there wasn't too much into it in terms of, the type of trade. This thing had some news out. You can see it popped in at around 11 o'clock. And, for me, I don't run like scanners or news scanners or anything like that during the day. But one thing that we always do is like we've got a whole group of like awesome traders in our chat room that are always like kind of posting stuff. And so All Day, who's one of our guys in the morning, he started talking about Exxon and SAEX. I said, let me take a look at this thing. And man, that thing started to fly right off the bat. And so once you catch something like that, it's just a matter of, waiting for the right entry. And so, what we ended up doing with this, which is a really kind of simple pattern, is, this thing went from $7 to $22, which obviously you can't chase it up this way. But what we can do is kind of wait for it to do its late day breakout. So when something gets extended like this, you just need a longer pattern. When you get extended like that, you can't have like kind of like a really short pattern or it won't work. And I actually ended up trying it on this pullback here to the 9 EMA, and it started to curl back up. And I ended up getting stopped out because that pattern is really too short for that time of day. Kind of a 3 or 4 candle pattern works really well at the open, but towards the middle day to the end of the day, you need that longer pattern. And so, this thing ended up kind of coming back to test the VWAP. And that's like your telltale sign. If it comes back and starts testing that VWAP and it starts to hold, that tells you that probably there's like a late day breakout in the works, but it's still a matter of patience. Remember, like I'm down on the day, right? I can't get anything going. I read the market wrong. And so I've got to kind of stay under, right, my max pain and really time this thing right. And so, as this thing is starting to really tighten up, the key to trading is, right, the widening of range. As it tightens, you build up explosions. So you got a wide range, and then as it tightens and tightens and tightens, that compression of range is what creates power. And then typically what you see with these kind of day-long consolidations, I noticed that 2 o'clock tends to be the sweet spot. After 2 o'clock, you can kind of get that late day push. And I typically don't like trading into this time of day, but on a day, some days you just have to grind. Remember, it's our job, right? So it's like, as much as you want to take off and just lick our wounds and say, man, like, you know what, like, I'm going to go and run around a little bit today. If you have something that could be a good potential, then you got to wait it out. And as this thing started to tighten up, it was just a simple matter of hitting this breakout. I even had to kind of chase it up about 30 cents because this friggin' spread on it was so big. And then it was just off to the races. Once this thing broke, my gut feeling was it could get to this 200 SMA. And so that's kind of how we managed around this thing was, now we can get this thing. You never have to trade huge size on something like this because like its range is going to be so big. And so, you want to pop in, like if you have a smaller account, you might even be doing 50, 100 shares. If you have a bigger account, maybe you're doing 500 shares, but you don't have to get too crazy with it because the range will pay you. And so, as this thing started to spike out, it was just a matter of kind of scaling out along the way. And then as this thing pulled back to the 9 and started to hold here, I ended up taking this trade again for that kind of end of day run and, selling into the spike as we started to hit that 200 SMA. And so, the pattern itself was simple, right? You guys can see it. It's just a flag pattern, right? It pop up, it's hanging out on that VWAP, the range compresses, and, it shreds. The pattern is okay and easy to see. But the hard part about trading that gets us in trouble is, right, blowing our financial and mental capital before the one good trade that can pay you for the day avails itself. And so it's really important when you're cold to just keep managing your risk, taking some small losses, not taking anything too crazy or too big in losses that puts you out of the game. So hopefully that helps, guys. Let me know if you have any questions. As you guys know, we're starting our trading boot camp, which is a 60-day trading boot camp that's designed to take you from really A to Z on everything you need to know about my style of trading. We start class tomorrow at 8 p.m. Eastern time. As always, we got room for more. Would love to have you in there. Feel free to hit me up on the Bulls on Wall Street contact page, or you can just email me, canal00@gmail.com. And, I'll hit you up and we can talk about your goals or somebody from my team. And it's going to be a pretty fun class. We got a great group of people together. So, guys, if you liked the video, make sure to give me a thumbs up. It's late night. We're working. We're trying to spread the word to our community to get this thing growing the way we need to spread the word. So I love you guys, and I will see everybody tomorrow for our YouTube live at 9:15. And then if not, I'll definitely see you in class tomorrow. Love you guys. Peace.